Hi there and welcome to the FOMC rate decision preview for January. Following the first rate hike in almost a decade, focus is now firmly fixed on the Fed's language that they're going to use at the upcoming meeting and how many rate hikes we can expect for the rest of the year. That median projection for the Fed currently stands at 4 rate hikes, with FFR futures now pricing in the next rate hike in September of this year. And just to be clear, we are not expecting projections at this upcoming meeting. Now, in terms of what the Fed have been focusing on, inflation has been at the forefront of their minds, and most specifically, any downside in inflation expectations if weakness was to be seen in the US economy. Analysts have also highlighted that individuals will focus on commentary surrounding divergence between the Fed expectations and market expectations, any commentary surrounding the poor start that we've had to 2016 so far, and finally any impact that a strong dollar is having on the US economy as a whole, and specifically the manufacturing sector and exporters. Now finally, in terms of a market reaction and what we're looking out for, this meeting does have the potential to be slightly subdued given that overwhelming consensus for the Fed to leave rates unchanged. However, we are also looking out for a slightly dovish rhetoric from the Fed. So therefore it's going to hinge on how dovish the Fed are in this next meeting. If they do adopt a harshly dovish rhetoric highlighting all the recent developments and how this could impact on the US economy, then we could see some weakness in the US dollar alongside lower yields across the curve. However, if they were to downplay the recent developments and glance them over, then we could see an inverse occur across US asset classes. Thanks very much for watching. Hope you have a good evening.